Hi there, Tukey. If you're here for the Q&A, nice to have you in if you are. Hey there, Rolling Sushi Master. Happy Friday to you too. All right, well, we'll wait just 3 minutes here. Start. I think Rolling Sushi Master last week, looking at an example of rolling. I was going to maybe cover on USO like the end of May that I've been kind of battling. So I was thinking about starting there, but we can start with questions, whatever works. You guys just talk to me. Still know what we want to do. Let's wait till 2 o'clock here. Oh, I should share my screen. That would help, huh? Okay, I know I have Discord on there. I hope that's not too annoying to see that a second time. I just want to be able to see the chat here. Two Heels not wanting to be here. That is okay. Is this imped or limped? Thanks for joining. Tom's out. Whoever wants to be here, we're here to answer questions. What needs to happen? We will start with USO here, though, but we are going to put this on Do Not Disturb as well. Okay. Okay. Well, since you guys are here, wait. Once again, it's 2 o'clock. Give me 1 minute. Okay. Well, for now, we'll just get started on the rolling example, and if I need to go backwards, or if either of you two have questions, just let me know. Okay. So we'll start with an example of rolling. So, kind of wrote it into this spreadsheet if it's clear, and if it's not, you guys let me know, and I can show you on the table too. But in fact, we'll just do this for now. Just a minute here. Okay. I hope this is clear for you all. If not, just try to look at it. So I started by opening an iron condor on USO. And so when I opened up this, now I'm just going to use this table. These are obviously today's prices and everything, but we'll just use it as an example. So when I opened up this iron condor, I was long 59 leg, short a 61 leg, so $2 width, and then I was short the 74 leg, long the 76 leg. Okay. Now, when I opened this, you'll see I put ticker prices around what it was when I opened it, which was $67. So, somewhere around here. So I was about in the middle of this iron condor. Once again, width was $2. So when I opened this, I received a credit of 66 cents, which is what I like to see when I open a fine wrist trade. I like to get a short. I like to see it like the width of the strings. Okay. So it's in line. That makes my max loss $134. $2 minus $66. Sorry, 66 cents. Then we had a huge move. You can see it happening here. We had a huge move on oil. I'm sure you all remember. It was more like here. And so at that time, it was 73.44. So we have blown pretty close to past my short strike here on the iron. So In order to collect more premium, I sold to close this, I bought to close this, and I rolled this up the 65, 63. Now, when I did this, and I did this all in the 718 expiration, when I did this, I collected an extra $10. So by collecting the extra $10, I've now received, now I might have incurred a tax loss, but at the time, but I have net credit of $76, and now my new max loss is $1.24 because $2 minus 76 total. Then oil had the huge jump up. This was at about 616 here, so we would have seen it around here in the way up. That's at 77.22. So we're down here. This is my condo currently at that time. I then decided, okay, I'm going to roll it again, same expiration. And so I rolled this to the 69. Excuse me, I rolled this to the 71. I rolled this to the 69. So now here's my new iron condor that I opened. In order to do that on 616, I gained 23 more cents. So my net credit then becomes $99. Max loss is $101. Okay, as we know, kept on kind of sitting on it. It was at 77.22 when I did this, so we're past my long here, which is not great for the iron condor. But what happened was that I decided to sit and wait. As we know, oil dropped. And I kind of thought, you know what, hey, worst case scenario, I take $1.01 loss. Let me just sit and see. $101 loss. So I sat and waited. Oil's gone back down. It's pretty much flat actually since this happened. And so because of that, I decided to close this whole iron condor out. And then I recentered and opened a new one, which was the current trade I have, where I opened up an iron condor here. This is the opposite. Oops, come on. Okay. So now I'm short the 71, long the 69, short the 75, long the 77. Still keeping my max risk capped at $2 in total, ignoring credit received. When I did this, I rolled it for a net credit of $14, bringing my max loss now to $87 because my total net credit is $1.13 now. Now, this trade is currently open. I have, that's, you know, like I said, my max loss is 87 bucks. I guess you're the only one in here rolling sushi, but I'm happy to have you here. So I'm, you know, we're at what, 75.93 today. So yeah, I'm past my short. I don't love it, but once again, my max loss right here is 87 bucks. So I'll see what you're typing, but I'm probably gonna wait until next Friday because that's 21 DTE, and I'm probably gonna close this and reopen into September 19th expiration. I don't know exactly what I'm going to do. I'm going to see. Obviously, I'm hoping to collect a credit, and then I will hopefully reset. I'm kind of looking at it. We'll play around with it right now, even if you want to see. So right now, I could close this for $1.26. I could incur a $13 loss. Pretty low, pretty much a scratch in my opinion. And I may end up doing that on next Friday. I'm going to decide next Friday because that's my 21 DTE. I kind of like that USO is kind of moving sideways, so it's kind of helping my iron condor, even though I'm past the short. So there's a couple options here. And so we can go over that and look at that. Is that what you would like to see, Rolling Sushi, since you're the one that brought it up before? And hello, No Sex, thanks for joining. And Flexed also. Right now we're just talking about a roll I did. I opened up a Iron Condor in USO. It has gone against me. I'm just managing it. Currently sitting at a net credit of $1.13, max loss of 87 cents. Prior to the large move in oil prices, what made you choose USO as a good candidate for selling an iron condor? Okay, so honestly, with this one, I don't know if I follow Tasty Trade, and they send daily emails with trade ideas, and someone from there posted a trade idea for the iron condor that I opened up to begin with. They chose a different expiration than me. They chose a weekly. I went for the monthly. So that's why I ended up picking it. And then hello, Kenzo. Just ask, answer. Oh no, he's here. Okay. So, Rolling Sushi Master, whatever. So would you want to look at what I could do maybe next Friday? We could talk about it. Okay. So let's just pretend I close this and reopen in September. So we'll just say the net debit paid would be 126 here. Okay. So if I do that and we go to September, I have a couple options. I could recenter this. Let's see if we look at this. Let's just recenter it. Let's just see what this gives me, and then I'll move around. So I could recenter it, do this, or something like this. Let's even go here just to see. So could recenter it here. My net credit would be a cent. Probably won't want to do that because it's only a cent. Not great. But what I definitely don't want to do is I don't want to increase my risk here. I went in knowing my max risk was, $2 minus net credit received. I don't want to make it $3. Even though I get more credit, I don't want to add more risk. So we want to keep it $2 wide. So you could do something like this. Net credit is a penny, not great, but it recenters it. Hopefully with theta and everything, I can get out for a small loss, $0, or a small gain. Another option is I go for, hey, I'll just do an iron butterfly on USO and just kind of ride it and see. If I did an iron butterfly, as of today, I would get $1.89 minus the 126 to open it or close it, excuse me. So that's what, 63 cents? So if I did that, I'd get another 63 cents, which would bring my net credit to 176. So now I'm looking at a $24 loss, $1.67 max gain. Not going to happen probably, but max. And because it's a butterfly, very low probability of getting that max, very low probability of getting anything, but you never know. And so that's one way to handle it is just go for a butterfly and let it ride and see what happens. I mean, we're talking about a max loss of whatever I wrote here. What I write, if I make it 0.63, we say it's $1.70. Yeah, so 24 cents. So it's like, okay, for 24 bucks risk, maybe I let that ride. Or like we talked about, I could go for like a 74, go for something like this. I'm going to collect a $15 extra. So once again, I'll read that in a minute here. Once again, if it was 15, brings me to $1.28, max loss of 72. So that's another option. I'm kind of play with this. Like I said, I'm going to keep looking at it every day, decide what I want to do, and then make a decision probably sometime next week, Friday at the latest, because I always want to roll 21 DTE. I did not do that originally when I moved from July to August, but I plan on doing it now because I want to keep on top of this just to hopefully walk away with a scratch or a win. Now, excuse me, do you look at skew when putting on these trades to see if you can capitalize on bias? Sometimes I do look at skew. That's a good thing to look at, of course, because we look at let's look at September right now. We look at the skew. If we go for a 20 delta, 21 delta put, 21 delta call, 20, we'll go. A little bit of a skew, not huge, but a little bit. Like the call leg at 20 is going to give me $1.07 mid. Call put leg at 21 was close enough, gives me $1.19. So it's a slight put skew, not a lot. So it's something I do consider definitely. I don't honestly. I've played around with a lot of iron condors. I don't love iron condors, mostly because right now we're in such a huge bull market that you're going to have the long side of that iron condor probably tested most likely. So it's not. So I don't love iron condors, but skew is definitely something to pay attention to. You can go, if we look at this one and just say I was opening a new trade today. I mean, you're going only about what, $6 down this way, but you're going to go up 10. That's or 9. It's pretty good. You definitely have the upside built into that. Kenzo, you're free to ask questions also. Like I said, we're going over a roll. Once we're done with this, we'll move on to other questions. So feel free. And if you're here just to listen, that's okay. I'm happy to have you here, man. Or woman. So general principle of rolling. What would you say you are trying to do when rolling? Is it maintain the width of the losing leg and collecting a credit? So definitely maintain, if it's an iron condor or a vertical spread, I'm definitely wanting, or an iron butterfly, any of those, I'm wanting to keep my risk the same. So you're not going to really, you don't want to increase your risk. You want to keep it the same and then obviously reduce it by hopefully collecting a credit also. So is it maintain the width of this losing leg and collecting a credit? Yeah, it's basically exactly what you said, I guess, to answer your question, I believe. How much until time to roll over makes sense? What do you mean, like what expiration I go to next? So following Tasty and kind of what I try to do, and I didn't do this before a lot with my covered calls, but I would always, let's pretend this is next Friday. I would, and I'm in August 15th, let's say, so my 21 DTE is whatever next Friday is, the 25th. So my 21 would be the 25th. I would go to September. I would maybe go to October, but honestly, I wouldn't go past October. Mostly because it's just too much time. Um, you know, there are times I have done covered call rolls and I'll go like 3 or 4 months out. Not the best idea. Just too much time in the trade. I like to keep it in that, overall trade in that 30 to 60 day range, all of that. And no problem, Kinzo. Thanks for joining. Yeah, we're just going over a roll, and I can show you maybe again what we're talking about if you are curious. Um, might not show you the full thing, but show you my spreadsheet. But the gist is, I opened a Iron Condor on USO around the end of May. It has moved against me because of the giant spike we saw in oil when everyone freaked out when the bombing happened. So that's kind of what we're looking at. If you want me to show you the spreadsheet that I was looking at, we can go over that too. But yeah, any other questions? We can move on to something else. Or Rolling Sushi's got other questions, or Kenzo, if you got other questions on the rolling specifically, or maybe look at another example, I can maybe pull one up. I could pull up one that's maybe a winner that I churned into just collecting more premium. Okay, so just to show you the spreadsheet, Kenzo. So I opened the trade originally. $2 width of the strikes. I have just $2 here on each side. I opened up for 66 cents, which is about roughly 1/3 the width of $2. So 2 divided by 3 is like 67. So I like to open up a defined risk trade in this way with selling when short to collect 2/3 of the width of the strikes. Excuse me, 1/3 the width of the strikes. So when I opened it, my credit received was 66. My max loss was 134. Oil moved against me, big old jump in oil. Not quite blowing past my short leg, but getting close. So then I rolled the puts, the untested side up, collected a $10 credit for this, reducing my max loss to 124. Then oil had a huge jump around, where did I do the 16th? Around here, huge jump. We're at 77.22 when I did this. I rolled the untested side again, the puts, and I collected a 23-cent credit for this, now making my max loss at $101, excuse me, and my max credit received, or yeah, my max profit's $99 at this point. Then I think last week, 2 weeks ago, I decided to roll this out into August. So I closed the whole Iron Condor in July, reopened it in August, reopened it with this trade here, where I'm long the 69, short the 71, short the 75, long the 77. Did this, max or new credit received was $14. which made my max credit received or total credit received 113, max loss $87 right now. Once again, as you can see, USO right now is at just under 76 bucks. We're past my short leg. I'm likely going to manage this sometime next week, Friday at the latest. Probably going to close this out, open up a new one in September. What I was showing to Rolling Sushi Master before you got in was that, there's a couple options. You can either recenter the Iron Condor. So if I did this, I'm collecting a credit of $6 because I could open it for 132, close it for 126. Or you could or I could move these around and play with it and get a little more credit. Or you could do an Iron Butterfly if I wanted to. Or if I did that, I collect a credit of about $63. So if I collect $63, then my max loss becomes 24 bucks. So there's a couple things I can do. And if I did that, I would hold it probably for a while, just see what happened, kind of take it as a gamble. $24 loss, pretty low. So what's special about that rule? 1/3 of the credit of the width. So to answer that first, 1/3 to get a credit 1/3 the width of the strikes is just a tasty trade thing that I follow. I think it makes it for a good rule of thumb. Like you can always go over that. There's nothing wrong with that. You just don't really want to go under that because it's just kind of a lot of risk. You're getting a low reward, high risk. 1/3, 2/3, not a great risk reward to begin with. It's not bad, but we're going for a defined risk trade. So that's why I go for 1/3 the width of strikes. Is that Tasty Joe's, and I found that actually works pretty well when I've been doing it. Next question: when rolling, are you also rolling the winning leg? In this case, the short put spread to maintain the structure. So, sorry, not rolling, but reselling. Wait, sorry. Can you explain what you mean there? And Kenzo, while he's responding, did that help to catch up, Kenzo? Hope I'm pronouncing that right. Yeah, Kenzo, feel free to ask questions either about this, and then once we're kind of done covering this, we'll move on to other things. Of course, I want anyone to ask questions. With oil testing your short call spread, when rolling, are you reselling another put spread to collect premium to help offset the loss? So, I mean, I guess in a way, because if I'm talking about this, I mean, if this answers your question, please tell me if it don't. If I recenter, right? Recenter. Let's do a recentering here. If I recentering, I mean, in my opinion, I'm reselling this short because I'm recentering the iron condor. Is that kind of what you're saying? Are you saying you put on the second put I would keep the put spread in here because it's going to give you that credit. Like, obviously, I'm paying a debit in this instance. So I think in this instance, right? That's where my credit's coming from. Yes. Always maintain the width when you are rolling because, and I have done it where I don't maintain the width, and that's a lesson I learned. But I will open this trade with a defined risk. Why would I take on more risk? Just to collect more money. It's not wise. We're talking about a very low loss here, like 200 buck. It's $2 spread. It's pretty low. It's not a huge risk to begin with. Going to $3 wouldn't be terrible, but I opened the trade with that risk in mind. I'm not going to increase my risk. But I guess you're saying, what if I did like that, right? Where I make this width longer maybe and keep this width. But once again, if it starts going down, then I'm really more in trouble, right? But once again, we're in a bull market. It's going to change maybe eventually, but we are at a point where the call side of an iron condor is going to be tested more than the put side, depending. Yeah, of course, you're welcome. No problem. Hope that was clear. So for Kenzo or Kenzo, do you have any questions about that at all? I mean, we can go over another rolling example if you all want. We can go over something else. Either one, you're both free to ask questions, or if we want to stay on this rolling, in this instance, we can talk about that too. Here to do what you all want. I also have rolls where wasn't necessarily losing, but I decided to keep rolling to kind of keep collecting premium, and I'm not necessarily losing. Um, but I see you both typing, so I will wait. Yes, we can go over bull. I told you that in the thread. So yeah, we definitely will cover bull. Um, but yeah, we can take that next. I want to see if Kenzo's interested anymore, but if not, we'll go on more. I'm having a bit of trouble with the screen. The images are so small, so you can't see and follow the conversation. I understand. Sorry. Do you have the screen full, at least as big as you can on the stage there, Kenzo? I have a giant. Okay, I have a giant monitor, so that doesn't help. Um, if you have a specific question, maybe I can try to clarify the best I can. Um, I don't know if you're on your phone or what you're on. I mean, if you're on your phone, you're going to have trouble just because I have a giant screen. I have a widescreen monitor that I'm using. Okay. So, for now, we'll go for Bull with Rolling Sushi Master here because he wanted to do some long delta exposure with Bull. So, and Kenzo, if you say like, hey, I can't see, like I can talk about it more, which would be good because if this might happen when I upload this to YouTube later, so please go ahead and give me information. Hello there again, Flexed. So with Bull now, Rolling Sushi Master, when you say you want delta exposure, do you want a synthetic stock delta exposure of 100 deltas? You want a little less than that? What are you looking for? Okay, so one strategy I like that if I'm bullish or bearish on a stock, you can do that. You can you're long 100 deltas and literally can receive a credit. So what would you like to do DTE wise, Rolling Sushi Master? Do you want to go just to September? Do you want to go to the end of the year or January, I guess? Like what kind of DTE were you looking for with this? Okay, you want to look at maybe January of next year? Okay, so if we look at January, Bull's at just under 17 bucks. So what you could do for a synthetic stock spread is what it's called. Is you go long a leg, you go long a call, you go short a put, both at the money. This gives you roughly a delta of 100. So you're basically synthetically long 100 shares of Bull. I could open this up today for a credit of $1.90. No cash out. You get that $100.90 today. You're long the 1750 strike. You're short the 1750 put strike. And so this is a way that you can get long the stock. You have until January for this to go correctly, which is keep going up. You aren't putting any money, no cash outlay today other than your collateral. And so worst case scenario here, if you open this up, assuming you like Bull and you want to hold it long term, is this moves down, you still can then buy the shares at 1750 for the put side minus the $190 credit. So that you then own Bull and adjusted cost of like what, 15.40. So you own 100 shares of Bull at roughly $115.40. That's worst case scenario. If this keeps going up, this goes in the money. This goes out of the money. Sorry, excuse me. The call leg goes in the money. So anything up is going to help you. The put side goes out of the money, which means it's going to decrease in value, which is a good thing. So you can ideally close this out for an additional credit later on. Or maybe you get a dollar move and you're like, you know what, I'm happy with $100. I'm going to close this out at $90 debit. You walk away with $100. That's a way to do without any money out. You have a collateral, of course, and you want to be sure you're really bullish on the stock. I mean, and then alternatively, another thing, if you want to go short a stock, you can do the opposite of this. So we go here, we go like this, maybe. Yeah. Now you're short 100 deltas, receiving a credit to open. Now, of course, you have a naked call leg on this, so it's riskier, but that's a way to short the stock. But that's not what we're talking about, so let's go back to this. So this is one way, rolling sushi. I like the synthetic stock spread. I've been doing it a couple times. How could you change the risk? Okay. So are you, Rolling Sushi Master, are you in a broker? Two ways. So number one, Rolling Sushi Master, are you with a broker that requires the full cash collateral with a put? No. Okay. Well, let's pretend like you were. Let's just say Kenzo did that. What you could do, just to let someone know, is you could buy the like roughly a 5 or a 3 delta put. This would lower your buying power, where you only have the $851 loss, and then you're roughly 990 delta. So that's a way to mess with this. And then another way is a call diagonal. Now, let's see what we want to do with call diagonal here. Let's buy the 1750, and then we'll go for a shorter dated leg. Let's go to August 15th, and then sell the 20. Now, we can play around with this. We can make this wider, less wide. Let's even go $5 wide. So this is a way you could do call diagonal, where you are long the 1750 in January, you're short the 2250 in August. It's going to cost you $250 today. You got 26 deltas roughly. So if Bull moves up, even past, not too far past, but even past 225 a little bit, you could close this for more than $5, because the extrinsic value of this long leg is going to keep on going until it gets to too high. So that's another way to be a little safer, quote unquote. It would be cheaper if we go to, instead of January, if we go September, and if you buy the 1750, sell the 2250 in August, you're then only spending $143. So that's another way to keep it, quote unquote, safer if you don't want to be kind of long, have that short put. Max loss now is going to be $143. Max gain, undeterminable. That's why it says 0 here, is that it's hard to really know, because technically you could allow this to expire. If it doesn't hit 2250, you could allow the short leg to expire. Then you're still long the 1750, and you could open up another short leg in the future. Does that kind of help you there, Rolling Sushi Master? Hey there, new fish. We're just answering questions. Fish, happy to have you here. Yeah, so anything you want to ask, you can ask. Rolling Sushi, if you got more questions on Bull, we could look at maybe another one. And then Kenzo, of course, feel free. Or if you need more clarification, Kenzo, because you can't see very well, feel free. And Fish, thanks for joining. So good question, Rolling Sushi Master. Given Bull and where it is now, how would you personally trade it? So, it's hard. I did a synthetic stock spread on Bull earlier. I did it. Can't remember how long ago, like less than a month ago, and I closed it out I got a $150 gain in like a couple days, so I decided to just close it out. Um, it's hard. I know Trina's talking about how he's pretty bullish on Bull. I'd say I'd look at the if I was really bullish on Bull, happy to own the shares at 1750. Worst case scenario, I'd probably look at the synthetic stock spread, just because I like to be able to be long 100 shares and receive money today. I think a call diagonal is also a great move. You get that upside move. Yeah, you kind of cap it with that short leg being shorter dated, but I'd say either one, synthetic stock or call diagonal, great way to get in if you want bullish and you're not going to want to buy the shares totally today. Um, is that I mean, obviously another one, and I'm sure you know this, another one you could do, of course, is just do a vertical spread on it. You know, going to do this for 250, 57, not quite great in terms of the 1/3 of the width of the strikes like we were talking about, but that's another way to go bullish, of course. Um, Maybe you want to go here and here, maybe, but still not great width, not great. And you see, you got pretty wide spreads in bull, which is not ideal, but not terrible. Could I go over the diagonal? Yes. So, do you want to look at the January as my long, September as my long, October, November? What do you want? What do you want for that? If we can go over it more. Tenzo, once again, feel free to ask questions, follow up, or say, "Hey, I can't see shit. Can you explain it better?" Well, why would you put on a diagonal? I'd say a diagonal for me is, I'm bullish on the stock. I don't want to really spend too much money, A, and then B, you know, then that way if I'm wrong, I'm losing a lot of, I'm not losing very much, and then B, kind of cap the, just looking for, I guess the call diagonal, I'm really looking for a short-term directional move. So it's going to move in my favor, probably going to close it out after a buck or so of gain. Just take the risk off the table. Um, so I opened up that Oscar call diagonal earlier today. I don't know if you saw. Um, it's one where people have been talking about it. Mate G in our group brought it up. And so, yeah, I decided to go with this because instead of doing a synthetic stock with this, is I don't really know very much about Oscar. I know a lot of people have been talking about it. I see like Bob Dog is talking about it a lot. And so I thought, okay, you know what? I'll open up the call diagonal, and that way, it's dropped a bit today, but now I got some upside. I think I spent $1.77. So it's like, okay, if this moves in my favor, great. I can get it, I can probably collect a little bit of, get closes for a credit later on. I see it as like a low risk way to get in. Another way with bull, sorry to go back to bull, and you're asking what else to do. Now, this will cost a little bit more, but another way with bull is called a zebra trade. It's zero intrinsic. I think we talked about it last week. Zero extrinsic ratios. I forget what it is. Anyways, it's basically a way to go long 100 shares. You do pay a debit up front, but you're long 100 shares. So let's just look at it for September. You would buy 2 legs at around a 70-ish delta, and then sell an at 1 at the money call. So if we look at this, we're long 2 of the 1250 calls. We're short 1 1750 call, and this is 100 deltas. I have to pay $700 to open it today, but you're basically long the stock. So if this keeps going in the way you want it to, if it keeps going up, you're long 100 shares. You're getting that upside, even if you blow past your short leg. And that's for September. We can go further if you wanted to, just to see what it looks like for you. So when you say, would you ever consider Selling an out the money call in order to lower the cost but cap your gains and take advantage of call skew. Do you mean for the zebra specifically, or for something else, the call diagonal or the diagonal? So the diagonal, just to look at diagonal, let's just do September and August for example purposes. So I would buy the out the money call here. Now you could go further, but let's just look at 1750 and then still sell the 20. So $1.07 debit, paying 107 bucks. You know, you're pretty low. Now, if we go further, if we go like, let's say we do the 20, like you're saying, is to keep it 22.50. Okay, I'm paying $87. It's not bad. You're only long 10 deltas, where if you go the other one, you're long 13 deltas. Still not great. Let's go to 22.50. 18 deltas. I mean, it's not a. So what when you say you want to look at an out the money call, what call would you buy in this situation? Like the 20? Okay. So you go 20, and then what do you want to do? Short 25? So in this case, we're short the 20. It is, two strikes above them in the money, or at the money, excuse me. And you're short the 25. We're only going to pay 110 bucks. It's not bad. I mean, it's just you got to be very confident in your $20 strike, right? You got to be very confident that bull's going to go over 20 before September. I guess if my view was I was expecting explosive growth, but up to a certain level, like $20. So you're saying you think it's going to move up. I don't know if it's going to move past 20 by September. Is that what you're saying? Yeah, so I feel like for me, if the call diagonal, I probably wouldn't buy the 20 in that case because, you're, I mean, it might move up. You're probably going to make money on the trade. Either way, I think you just could make, I think, in my opinion, make a little bit more with this. But I don't think there's any wrong choice here. It's kind of your own risk tolerance, right? I mean, you're going to lower, like if we go for the 2025, you're lowering your debit paid. Your risk is lower. Your deltas are a little lower. But if you have yeah, if you have a directional bias, then that kind of you're still going to likely make money on this. Thanks, Kenzo. Thanks for joining. And yeah, I'll upload this to YouTube. So no problem. Have a good weekend. I'd say, I guess, Rolling Sushi Master, to answer your question fully with why would you maybe go for a 20 over the 1750 call? It would really be your confidence in your bias and how much it's going to move, and then your risk tolerance for it. Like so, one could say technically, if you're bullish, this is probably a little bit safer, just because you could blow past the 1750, which is great for your long, and then you still take advantage of what you're saying. If you don't think it's going to go past 2250, you're still going to be between the two legs where you could even let this expire and keep the 1750 going, or close this out for maybe a small debit, increase your debit paid, but hopefully your 1750 call is going to be in the money. Um, yeah, I guess it really just, so you think about, like, if you go, talking about, and bull is a little bit different because it's cheaper stock, but like, let's say if we did the 2025, you're talking about saving 33 bucks. And now I'm by myself. Oh, hello. Um, yeah. Did you hear what I was saying there? Can't hear me at all? Can you still not hear me? Technical difficulties here, everyone. Okay. Sushi, can you hear me now? Okay, any chance you can hear me? What? Might be me, actually. Now I'm muted, so that doesn't help. Just a minute. Okay. Can you hear me now, Rolling Sushi Master? Cool. All right, let me share my screen again for you. For now, we'll just do Tasty since you're you don't need to see the spreadsheet or anything again. So okay. So what point do I need to repeat anything? What point did you cut out? Yes. So all I was saying was if we go for the 2025 here instead of the 1750 to 225, so you open this up for $1.10. If we were to go for the one that I was looking at before with the 1750 long, 2250 short, it's a $33 extra. So you're not talking about very much more risk to go for that closer to the money long haul. So once again, it's all about how much you want to pay. I mean, like we talked about with the synthetic stock, like you can do the synthetic stock, you just got to buy that five-ish delta put. Yes, yeah, a little bit of trade off. I mean, it's if you're really bullish on it, you're gonna maybe get more of a gain. So there's nothing wrong with it. It just depends on your kind of your bias and how you're feeling. I'd say the at the money or just slightly out of the money is going to give you more likely of a chance to be right. But of course, nothing is guaranteed. Yes, I agree. Bull has been on a massive run. It's hard to know when to enter. Chances of a pullback are high. It's hard to know what's going to happen. I mean, we already saw. I think I put on a synthetic stock before when it was at like 11 something. I think it ran up to like what 15 or something. Let's see. Yeah, it ran up to 15 July 3rd, and then went back down to the 13s and the 12s. Right. So we already had a pullback like that. Likelihood of it happening again, there is a likelihood of it. You're correct. So yeah, it's all about am I willing to take on that risk? And that's why the synthetics call spread's kind of tough because it's like, okay, you've got to really have that long term bias, but that where like, hey, worst case scenario, I'm happy to own the shares at this short puts strike. Then there's the zebra, like we talked about. Once again, if there's a pullback, though, you're going to eat into your debit. Sorry, eat into the credit that you know what I'm saying. So I mean, to your point, I mean, another one like we talked about, is the short put vertical. Once again, this is not a great spread wise, and I don't love the 57. I mean, if you look at what's 57, 2.5 divided by 3, I mean, 83 cents. We'd hope to get a little bit more than this. We're not during market hours. You could get a better price during market hours. I had asked this earlier, but you're exploring. Yes. So I do want to do mentorships. We're launching that Kingdom U, as Royalty calls it, August 1st. Definitely going to be available as an educator. I'm kind of playing around with what does a mentorship look like to me. I know some people are doing it, like you saw David Knight's doing it for donation. I think Royalty is going to do it for free as included in the price for Discord. I think Trina said he's going to do it for about a year for free and then start charging. So it's kind of like to consider, what I want to do. I mean, I'm okay with doing it maybe for free for a little bit, or included, I should say, for a little bit. I definitely depends on what the time commitment is for me, right? And hey, I don't know, I didn't know if anyone was even interested, so it's good to know you're interested. I do not work full time. This is my job. Uh, I'm very fortunate. I made a lot of investments that panned out when I was young. So I've now been able to, for the last few years, decide to just trade full time and make, good enough money that I can continue doing it. Okay, well, yeah, hey, I'll keep you updated. So far, no one has told me any interest other than you, so I'm happy to know that someone's interested. Uh, I'm, of course, no expert here, but I'm happy to, I do know a decent amount. I've learned plenty of lessons. I want to help you not learn those lessons. But hey, we're going to learn lessons no matter what. Do you have any other questions, you think? Of course. I'll keep thinking about it. I'll keep you posted since you're the one that is most interested so far. Um, do you have any other tickers you want to look at? And it's like, hey, you're biased, and what would I do? Maybe would like to hear how you perform your screens for ops. Like a screener. Yeah. So, like you said, I subscribe to Tasty Emails. They give you some trade ideas. They also have a follow page where I can look to see what people who work there are doing. I'll look at those and kind of get ideas. Um, my watch list that I look at. Sometimes I write down stocks from after hour if people are talking about it. Not always, because you never know what's going on with after hour. If it's people in the kingdom are talking about stocks, so like if I hear a lot of people talking about, let's just say BTOG, it's like okay, well maybe I get in and see what's going on. It's nice to have the kingdom in that way, and then also like a lot of these people, they're swing trading, day trading, so it's like okay, well, maybe how would I structure a trade? He's talking about meta. Well, how would I structure a trade in the way that I like to trade? So that's kind of way. I also use highest options volume a lot of time. That's what this watch list over here is I'm just looking for like, okay, what's got highest options volume? What do I like? Let me take this. Those big company names are definitely something I look at. Sometimes the good ones, if they have a good, if it's a reputable company, have a big move down, maybe that's a good time to do a short put because it could rebound. Or sector views. I mean, sometimes I do. I mean, I definitely have not going to always buck the trend. I mean, sometimes you might be contrarian, but sometimes it doesn't pay off. So, like right now, like I said, we're in a bull market. I'm probably going to keep on going with that trend. I'm not going to kind of buck the trend. It's not going to work out for me. Um, I always like tech. I've liked tech since I started investing when I was in high school. I know a lot of retail shares have used technical analysis, but I don't believe it has any predictive ability. Me personally, I do not use TA. I know a lot of people use TA. It works for them. I don't understand technical analysis very well. Maybe it's something I need to look at. But I think it's all just giving you what gives you conviction in your plays, right? Well, thank you. I appreciate that. Maybe it's a mistake, maybe it's not. I don't think technical analysis, there's anything wrong with that. If that helps add to your conviction, that can help. I just I don't understand it, and I don't think it's going to pay off for me because once again, like you never know what's going to happen. You're just kind of making a bet. It's all about kind of defining your risk and lowering your risk and hoping for to pick a high probability of success. That's why I aim for certain deltas, things like that. Hello there, Flex again. Hey, Flex, if you got any questions, feel free. We're just kind of rolling sushi matches, ask a couple questions. If you got questions, Flex, please feel free to say something. All right, Rolling Sushi Master, thank you for stopping by. You have a great weekend too. I will see you next week, I am sure, and I will keep you posted on the mentorship. And you have a great weekend as well. All right, Flex, it's just you and me. If you got questions, man, I'm happy to answer. Um, I don't know if you followed my alerts a little bit, if there's like even a specific trade I opened and you're wondering what's my thought process behind it, what a spread is, uh, specific things for your portfolio, like, hey, I'm in Robinhood, I don't have level 3 options, what would you do? What is selling options? Anything you want to ask Flexed, or if you're just here to stop by and listen to my voice, that is fine too. Although you are the only one in here and I don't have anything planned. I plan to be on here for another 30 minutes to an hour, but, you know, I'm looking to you for help here. Hello there, Tiki. Once again, just answering questions. I know you were in here in the beginning, answering questions. So if you got any questions, let me know. Anything. General questions. What's a spread? Hey, why did you open this trade? Don't have anything planned. I can go over some rolling if you guys want. Whatever you want to do. What are my guidelines for the trade? What are my parameters? What is what is a spread? If you guys just want to hear me talking to myself this whole time, that's fine too. You are by yourself now. So if you got something, let me know. I'm here. I'm available. I got another hour if you want it. And if you're here just to listen and sit in silence, that works too. You let me know, man. All right, Tukey, thank you for typing something out. I'm happy to help. How's it going? It is going well, Tukey. How are you? Beautiful Friday afternoon for me in Flagstaff, Arizona. Doing okay. Well, I hope you're doing better. Let's make it better. Any questions, my friend? Okay, I was gonna say, what does getting into trading mean? Just getting into trading. So, what experience with trading do you have thus far? Well, there I get flexed. Please feel free to ask questions. Tukey is just chatting here. Mostly just stocks. So, you meaning you just buy some stocks, sell them, maybe day trade, maybe swing trade, getting into options. And so, what has been your uh, experience with options thus far? You're just doing like, are you listening to the live channel every morning? Are you thing? Like, what's up? Hey, profit is profit, my friend. One week, 5%, not bad. Slow and steady wins the race here. Following some calls. Okay, so anyone specific you've been following on the channel, or just in the Discord, or just everyone? Hey, we got some great analysts here. We got some great call outs, and definitely nothing wrong with following who you want to follow. I do something very specific. No one else really does it. A couple of people do some selling. Fridge Financials, the Cube Master, they both do some selling. Cube's kind of gone to more shares and other plays. Fridge does his double calendars with earnings. He does short puts also. I realized you could spread get my account for those. LOL, based on experience. Understandable. Yeah, I don't know. Is your broker Robinhood? Yeah. So yeah, I mean, if you depending on your account value, you got to get approved for level 3. And since your experience is low, if your account level is low and they don't give it to you, you're gonna have to pass a test. And I would suggest you wait until you are pretty sure you can get a good experience, because if you fail that test, you have to wait a whole year before you're approved for level 3 again. Fidelity didn't even approve level 1. That is not cool. But yeah, you want to really make sure with level 3 you can lie about your experience and all of these things, because they're not going to double check it. But you really want to make sure, because they will call you and they will do a test. You just need to make sure you understand options. I have experience because I decided to do level 3 without really knowing spreads very well, and I was had to wait a year. Fun, Robin. Flexed. Love that you're popping in and out. Yeah, and there's nothing wrong with the lying of experience. Like I said, they're not gonna double check you, but they will test you. And yeah, there's nothing wrong with getting some experience. I mean, so we could just talk about something that you could do in your portfolio. Do you have a ticker you want to get, or something that's like, hey, you know what? I like Rocket Lab, but it's too high right now. I'd like to get in maybe at a lower price, or something like Webull. Like, hey, I am bullish on Webull, but I don't really want to buy it at 16.89. I'd like to buy it at $10. Things like that. Hey, nothing wrong buying Bitcoin. That's what you want to do. I mean, if you could even look at, obviously you're going to be buying Bitcoins, but you could look at like IBIT, which is the Bitcoin ETF, and you could do some stuff there. BTCS, my bad. I don't know what BTCS is. No options. So, what is this? What is this? Okay, so they're crypto stuff mostly. Is that what I'm seeing? Found it somewhere on After Hour. Nothing wrong with that. Sometimes you got to be careful what's being pushed on After Hour, but sometimes you're good. I mean, you look at Pew as a very good example of what's being pushed on After Hour, and although that wasn't anyone on After Hour's fault, but did not work the way a lot of people wanted. I don't know if you noticed. Um, I was personally skeptical, and honestly, I wish I did a synthetic short on it, to be honest, because I would have made some money. Hey Flex, I know you're just keep on popping in. If you just want to listen, that is okay, but please do not be shy. You can ask questions as well. Most is cash right now. Got Alibaba 50% profits. Hey, 15%, that's nice. Alibaba's a good one. I've thought about Alibaba. I've been thinking about it since it went down a little bit. I assume you're just buying shares and selling them though. Yeah. I was gonna say I don't know what the hell that word was. Okay, looking for X moves pretty much and trying to understand theta. So, what about theta? Do you not understand? I mean, theta is really just time value. But if you want, I can give you a little bit more. I mean, the whole point is that theta decreases as time goes on. So the closer and closer we get to expiration, the less and less theta you have, which for selling is what we want. If you're buying, it's not what you want. When we sell an option, we are looking for theta decay because that helps to lower the price of the option. So then, you sell an option for $5. You hope for theta to be in your favor and the stock to move the direction you're hoping with deltas, which then helps to buy back for less money than you received, and you end up with a gain. Does that help you with theta, or do you want a little bit more? And hey, good for you on trying to understand these. The Greeks, they are confusing, and there's lots of lingo. So good on you for being playing safe and trying to learn everything before just jumping in. I will say from my own experience, though, obviously you got to do this wisely. You can read and learn everything you want. You're really not going to fully grasp it until you start doing it yourself. With Robinhood, you can start watch listing positions, things like that. By the way, what kind of information would you recommend starting out to understand price action? Unfortunately, I am not the best person to tell you that because I do not do technical analysis. There are plenty of people in here who do technical analysis. Royalty, Trina, David Knight, Sambo, Fish does technical analysis. The Cube Master does technical analysis. Investment Poppy, he does technical analysis. I think Fridge Financials, he does some technical analysis. Bordeaux does technical analysis as well, but that's specific to futures. Me personally, I do not do it. But I am trading differently than a lot of these analysts. I don't think technical analysis would hinder me. It would maybe help, but I just, what I'm doing works for me, and I just don't feel like technical analysis is what the right move for me. Now, it's something that I'm open to learn, and we have plenty of experts in here, which is very nice. Flex, you got any questions, man? Hey, keep on popping in here. I'm happy to have you talk. Tell me questions. Tukey's just going over general stuff. Tukey also Mirage. I mean, there's Jackson. There's plenty of people who do technical analysis. And hey, look at this. Itai is in here right now. Hello, Itai. Nice to have you here. Do you have any questions, Itai? Because Tukey's just asked me general stuff. Flex likes to pop in and out and not ask questions. So, yeah, I literally was just bringing you up because Tukey here was asking. If you can see above you, I did not have a good answer. Questions you have, Itai? Well, you take your time, my friend. I have another 55 minutes. We got time. No one else is asking questions. The one person who was left. I am to help you out. I am here. I am ready. I am not going anywhere. I will answer Flexed or Tukey's questions in the meantime, if you guys have any. Or Itai might beat you to the punch. In general, though, what would you say are a few key things that moved you over to the sell side? I'm interested to know. So for me, I moved to the sell side because I love receiving a credit most of the time. Sometimes I do open debit trades. I like to receive a credit to open a trade, especially with a cash secured put or a covered call. I know worst case scenario, I am still winning. In the point of a cash secured put, I am picking a strike of a stock I would like to buy at. In the point of a covered call, I am picking a strike that I'm happy to sell the shares at. Of course, there are mistakes you can make, like I was too eager to open covered calls on stuff. Blew past my strike. Yes, I'm happy I still got a gain, but I could have had a lot more. Okay, NVIDIA is my worst case example. But really, I just, options, as you know, are so versatile. There's so much you can do with options. There's a very cool product. I mean, they seem risky to people, but it's really just insurance, as we know. And The thing I love about selling is the probability is in your favor. I'm not good at, I tried day trading, I tried swing trading, I tried to be with China for a couple days, I tried to do futures. I just can't do it. And so I love to be able to figure it out with probabilities. And so I feel like with sell side is that probability is in my favor. Yes, my wins might be small, but it's all about how many times I enter a market. I'm not going to just do one trade and call it a day. I'm going to keep doing more and more and more. Probability of me winning is still high. Obviously, do it smart. It's really interesting how different methods just fit for different people. It is very true. It is important to find what works for you. Just because I like to sell does not mean that works for you. And also, it's cool to have different styles available because then you can be a jack of all trades, which is also great. And I never actually got the risk involved with the sell side. Like I understand the general explanation, but I haven't seen examples of a risky covered call. So, you know, yeah, the definition of risky is a little tough, right? So let's just look at maybe not Apple, but we'll look at Coinbase. So like Coinbase, I could go like, all right, let's pretend like it's Monday. I'll go for the weekly, and I'm going to sell an at the money call. Sorry, put. Excuse me. Well, this is pretty risky. You're at the money. You have a 45 delta here. Pretty high risk. Probability of you being right is 50-50 basically, 63% pop. You could be wrong. This keeps going down, and now you're buying coin at 417.50. Well, is that a price you like? I don't know. If you're wrong, you also do not have time to roll this out very much. You've given yourself 5 days. So to roll, you're really losing out on extrinsic value and everything. Whereas if you go further out in time to open this, then you have time to manage it and roll and keep intrinsic value, keep theta on your side, give yourself more time to be right. So on the tiny chance it actually plays out, you can get a big premium. With this at the money put that I'm talking about, yes, just slightly in the money, out of the money, I guess. But yeah, I mean, like I could open up this put for a week on coin, and I could get $1,330 today. But I don't know if you're saying thank you or praying, but I would say you're praying when you open that up. But there's people like Bob Doc. He does weekly stuff. I know Rise and all the Theta Daddies. They do weekly stuff. I don't like weekly stuff. You meant it as a thank you. Well, it's also praying. Let's be honest. It really comes down with a put, especially. It comes down to do I want to buy the shares at this price? I know the Theta Daddies. I think that they open. I don't know what the Delta Day target is. They do weekly. They closed it out at either 90% or let it expire. That's too risky for me. I don't like that. I would prefer to go out in time further, give myself more time to be right, give myself time to manage, roll out in time, make my probability of success higher. You are more than welcome to ask as many questions as you would like because it is helping fill the dead air here. So please ask them all. If you had 10 more, that'd be okay. Tuki's here just to kind of absorb, I think. He's got a couple questions, but he's very new to options. So, any questions, my friend, I can answer. If you have 10 more, like I said, please. Yeah, we need more people interested in the sell side. It's not strong enough in the kingdom. It is true, but you know what? I'm helping build it, man. I'm helping. We got the Cube Master. He's not really selling as much anymore. We got the Fridge. But I'm hoping to get more people interested. People don't like selling. It's boring. It is boring. I know it's boring. But guess what? Probability is on your side. You're also not really playing with the dopamine hits and the gambling aspect. Not necessarily. I know you like buying and stuff. Hey, that's great. You have technical analysis. You do this stuff. You're obviously very confident. But I fall into the traps of like, I just want to, I think this is doing it. I want to feel something, you know. But I am here to keep promoting the sell side, keep showing people, hey, you can make money here. Okay, well, David's an extreme example. Yeah, I can't compete with David Knight over here, man. This guy's insane. The growth I see year over year, that's kind of hard for me to measure because my portfolio is all mixed. I have my long stuff, I have my option stuff. It's all put together for my portfolio just to kind of help with my margin and everything. So it's hard for me to tell you what I see year over year. Um, and yes, Bavin, David Knight is a beast. He is a amazing trader, and we've got a lot of amazing traders here. And Bavin, if you have questions, thanks for coming in. You got questions, please feel free to ask them. Itai is just asking a couple questions. Yeah, you're welcome. Of course, Bavin, happy to have you. I know you popped in last week, so yeah, just keep on doing it. Yeah, I would say, hey, your portfolio 44% and over about 6 months, great return, great return. You probably, like you've said, you've recently had more problems because of Trump. Like the market is more volatile, it's less predictable. It's actually great for selling. High volatility helps selling so much. Premium goes up. Now, of course, volatility is a little low, but with Trump being so unpredictable, it's actually a good thing. Yeah, the market can take it any moment, but you just got to manage and be prepared. I would say if 44% return in 6 months, it's great, but yeah, you're not prepared for maybe when things shift, right? Like I think I saw you said in the live trading, like market's pretty predictable in a buy. It's great. Um, but yeah, it's all about still trying to find opportunities. And do both. Maybe you can do selling and do your day trading. So that's amazing. If I were to focus more on concentrating settle stocks, I want to hold long term and start selling bit by bit. You can help me out with losses. That's true. I am a big proponent over long term holds. I have built my wealth. Most of my income, my gains have come from buying stuff when I was out of high school 16 years ago. I have a cost basis on Tesla at 18.20. I got very lucky with them. I had a cost basis of $3.72 on Nvidia. I do not anymore because I've screwed it up, but I had a really great cost basis. I screwed that trade up. I'm upset with myself over that one, but hey, I learned the lesson. I still made money, but I could have made a lot more. I bought MSTR at what is now $29.80. I know that was going to happen. I got lucky. I had a huge shock when Fed started. My portfolio was still in myself. Still haven't fully recovered yet. Yeah, so I think in terms of long-term holding is you still have to have that long-term mindset because the market is over time the market has always shown it is going to keep going up. You look at from 2013 to now, or even 2005 to now, you had 2008, you had 2020. We're still way above where we were at 2005. The market is going to continue moving up over time. So it's like to manage your emotions of like, okay, yeah, I blew my port because I was still in the mindset of long term holding. Well, remember, it's still going to keep going up. You just kind of got to stay in it for the long term. Reddit traumatized me. I was still very new to options, that sort of market. Yeah, Reddit, great resource, but I'm sure depending on what subreddit you're looking at, it's going to be a problem. And some of those people don't know what they're talking about. And yeah, it's hard to know what's the bottom, right? Oh, Reddit the ticker. My bad, dude. Hey, but I will say I've done pretty well with Reddit. But like you said, it IPO'd, it skyrocketed. You could have been buying, but I think And Batman, I'll get to your question. Sorry, and I think it's about how you played Reddit, right? And I think no matter what you did when you bought the dip, I'm sure your positions are probably still up. I mean, Reddit's doing pretty good. You're good, Etai. Don't worry about it. So, Batman with yield max, the only thing I currently have is ULTY. I have ULTY because I had a bunch of cash in Robinhood and decided, hey, you know what? Instead of getting that 4% for a year, let me just get the ULTY dividend. I don't love yield max stuff. There's nothing wrong with it. I know people love MSTY. I know people love all those other ones. It's a great way to get, some nice dividends. They're doing the options work for you. But like in my opinion, it's like why not just do it yourself? But it could be a capital issue. Or not knowing, whichever you do. And also, Ty, just to let you know, you're free to ask any questions you want, other than Bad Fan asking us one question. That has not been very many questions. So please, anyone, everyone, Bad Fan, got more, please. I hope I'm pronouncing that right. If you guys have specific stuff, I mean, I see both Itai and Bad Fan typing, so please, but yeah. Salvage depending on your portfolio size, but do you cast your net far or stick to a handful of tickers to focus on? That's a good question. I'd say it depends. I like to stick with high liquidity, high volume. Those are mostly the more reputable companies. I like tech. I'm definitely going to stick with a reputable company. Um, I'd say I'm not too picky, but I definitely want to make sure it's something that I believe in long term, period. Unless I'm shorting it maybe or something like that, but something like I'm going to want to know about the company for sure. I'm not going to just premium juice or chase like hey, oh, BBAI, it's got a bunch of premium. Well, what the hell does BBAI do? I don't know. I haven't looked up. Maybe you all know, but I'm not going to jump into BBAI. Maybe I will, maybe here and there. I knew all this came from REI and started trading last October, so it's overwhelming in comparison to how easy real estate is to understand. Do you have any good recommendations for YouTube channels or books for understanding technical analysis? Unfortunately, Bathan, I do not have great technical analysis stuff. I know that Royalty posted something a while ago. Just a second. Let me see if I can copy this here and send it to you. Just a minute, Bathan and Itai will get to your question next. Where the heck is it? Come on. Load it. Come on. 1 minute here. There we are. So this is Bathan. If this works, this is something from Royalty that I saved a while ago. Some books that he read. Let me know if that works. Which are also more expensive. So like 3,000 shares of MSTR is $120,000. 300 shares is $120,000 to you. Yeah. So, and when you talk about that ETI, you talk about for just your swing trading, buy trading, or you talk about like for doing a sell side stuff for sell side. So yeah, I mean, if you're let's go look at this. Do you could you could go like, oh, I'm just gonna do a put, put on MSTR. Okay, yeah, that's going to take me almost 14 grand of buying, assuming you're bullish on MSTR. Well, instead of doing that, you could do a vertical spread. Here, it's not really exactly the width. I want more money than this. Let's do 20. Okay, not quite what I want still, but you could do like a vertical spread where this is actually going to take only $400 of buying power. Your max loss is $395. Max profit's $1. It's not great, but it's a way to play with the bigger tickers with less money. It's true, Ty, like lately, especially the larger companies do have three, they're in the hundreds. So that's why, like, with the sell side, is that you can do stuff. It's going to, take less buying power. Like you, you, um, you just have to think about it, be methodical about it, and like what you want to do. Like you could do a call diagonal in MSTR. Let's just say this is going to be expensive, but let's just pretend you're bullish on MSTR. You do a call diagonal. Yeah, this is expensive. Let's go. Still expensive, but so still, I mean, $1,800. Like I could do a call diagonal in MSTR, $1,800. This is too expensive. Don't do this. Don't do this. But there are ways you can do it to limit. You can play with those $300 tickers and spend much less money. And you're welcome, Batfan. No problem. You're welcome, Tukey. You already left, but have a good day, man. So Jackson, I mean, do you want to maybe pick a ticker, tell me your bias, tell me your buying power, and I can maybe play with a trade and see if we can make it work for you? So at the moment, most of my port is cash. I have $23,000 to use, but I'm still very hesitant on getting into anything until we see what the market is like from August. So middle of August, I would love your help. Okay, I totally understand. I mean, even though I feel like I understand why you're saying that because tariffs and we're going to probably push it off and who knows who knows. Um, but even so, in the meantime, you just want to look at something right now. I mean, unless Fan has something, um, I have 30 minutes if we need to, or we can cut it off now. Whatever works for you both. We got only you two in here, so. If anything, Rocket Lab is one of my favorites, but I feel like it's less relevant to the sell side with those movements and unpredictability. But I would love to see your take on it. So, yeah, Rocket Lab, it's a good one. People are talking about it. Obviously, you could just go long calls. As you saw earlier today, I opened up a short put on them. This is just because I'd be happy to buy Rocket Lab at $40. Rocket Lab, excuse me, at $40 if it had to be. If it went down, good way to get some premium though while it's going. There are several ways you could play it though. You could say like, I'm bullish on Rocket Lab, so let me do maybe a call diagonal where you buy the 55 in September, and then in August you could sell the 65, maybe 56. Let's go 65. So you could say like, okay, I want to buy the 55 in September. Oh, let's ignore my put here. You could say, okay, I want to buy the 55 in September, sell the 65 in August. This is going to cost you $430. Your upside is Rocket Lab keeps going, which is great because if this happens, if they don't blow past your 65 before August 15th, this could expire out of the money if you wanted to hold that long. If Rocket Lab kept going, because the long is longer dated, the extrinsic value of this keeps on going, where actually this profit graph isn't exact in that you actually could earn more than the width of this. Like you could close this for more than $5 because the extrinsic value of the $55 call is going to be higher than the extrinsic value of the $65 short. So you could close it out for more than $5. Now, if it keeps going way up, if it's like 75, then the extrinsic value of this long starts to decay. But it's a way for you to go long. You're long, at worst case scenario, $10, and you're spending $4.30 to get that. Um, you could do a, instead of doing it naked like me, you could sell the 40 and you could buy the 35. You could do a vertical spread on it where you're going to receive at $126, $5 width, not great. Maybe it's better if you go a little narrower or a little wider. You want a little bit more money than this, but that's a way to play it for bullish. Another way to play it is if you do a synthetic stock spread, which I've talked about before, where you buy a long call at the money or just out of the money and sell a put just at the money or out of the money. You open this up, you receive $317 today. You're long 100 shares of stock with this 100 delta. You would only have to use $776 of buyer power. Yeah. So in this case, your worst case scenario is that you're buying. It's called a synthetic stock spread. So in this case, your worst case scenario is that this keeps going down, then you're going to be buying Rocket Lab at $55. But if you're really long-term bullish, that's okay because then you own it at a price that you're happy with, but you have that upside of it going, and you receive a credit today to open this. So really, your cost basis isn't $55. Your cost basis is going to be $51.83, right? Because it's 55 minus 317. So that's another one. There's also the Zebra, which requires a little more money. But if you go Zebra, let's go December. You're welcome. If we go to a Zebra is another one we'll look at real quick, assuming you want to see it. Where we can go. Yes, okay. So this is a Zebra. The reason it's zero extrinsic, like ratio, something I can't remember, back ratio spread. Anyways, the benefit to this is you're buying two of like around a 70 delta, you're selling one around at the money, a little bit out of the money. You're now long 100 deltas. You're only going to spend $1,689. So that's still a fraction of what you would spend to just buy Rocket Lab today. And you have the upside of if this keeps going, you're long 100 shares. So even if it blows past 60, yeah, one of your long calls will get called away and you'll get this $15 gain that you built in, but then also you get the additional upside of the extra long call that you've bought. You have to be really, you want to be really certain on your bullish. But hey, you can get in long for instead of $5,000, $1,600. Yes, a vertical. A vertical is just there's two different types of vertical. There's a short vertical where you sell one and buy one further away, and then of course you can do a long vertical. Um, you could buy like the 40 and sell the 35. So you're gonna pay a debit, and your max gain is tapped at $5 if it keeps going down. Obviously, you can do this with calls too, where you like buy at 55 and sell at 60. You've capped your loss at 155, but if it keeps going up, your gain is going to be $5 minus this max. It's a vertical. There's so many to do. There's butterflies, there's iron condors, there's straddles, strangles, more. There's a calendar spread. If you're neutral, You are welcome, Itai. I really appreciate the info. I'm going to go to sleep. It's already 1:30 here, but you gave me a lot to think about during the weekend. Hey, you're welcome, Itai. Have a good night and a good weekend. And I understand it is 1:30 in the morning. I am never up that late, so I understand. Please go get some sleep. So, Bath fan, thank you for stopping by. By the oh, he left, but thanks for Itai for coming by. If you watch this video later on, which you might not, but whatever. Bath fan, just you and me. So, you got any questions? Want to know something? I can't talk much about technical analysis. Sorry about that, but if you have questions on selling, long-term investing, you were asking about the yield maxes and any other questions like that, I'm here for another 20 minutes, 25 minutes about, or we cut it off early. I don't have big reports to sell right now. I'm just turning positive after 4 negative months in a row. Hey, I understand that is tough. Once again, there is a way to do it with a small amount of buying power. There is always a way to do it. I don't know what, when you say big enough port, I don't know what you're talking about, but you don't need some crazy amount of money. You can do it with 5K. I don't know what you have liquid. You know, it's all about, and then who's your broker also. Okay, so you have, and who's your main one? IBKR or yeah, between those three, who's your main? Robinhood's your main one. Yeah, so I mean the only thing with Robinhood that's if you don't have level three options, you're not going to be able to do it. And then they require the cash secured collateral. I got you. So they have to buy them TPLF. I know. Hey, I know a lot of people are talking about them. Cannot buy them in Robinhood. Cannot buy them in my broker either. Um, I know people are about them though, but they are over the counter. So, but yeah, with Robinhood, if you don't have level three, it makes it a little hard because you need to be cash secured. You can pick smaller tickers to do cash secured puts. Cash secured puts are a great sell side generation, income generation. You need to be um, going in assuming you could buy the shares, but it's certainly possible. Do you have level three in Robinhood or no? You're talking about Ondas, like you sold some puts in there. Is that what you mean? You likely, oh, you sold calls. Okay. Yeah, you likely don't have level three options in Robinhood, but so you have shares of, I'm guessing you mean ONDS, not ODNS. You have some Ondas, and you're just selling calls to get some covered call revenue. Yeah, so nothing wrong with selling those. I mean, just my warning, because I can tell you with NVIDIA, because I screwed myself over. You want to make sure you really want to sell the shares, because even if you pick a strike that you think is not going to get hit, it could get hit. So you just got to make sure you want to sell the shares, or let's say you have 1,000 shares or 500 shares. Maybe don't sell calls on all 500. Keep some just in case. Yeah, I don't love covered calls for that reason. Um, I will do them sometimes, especially if I'm willing to sell the shares, you have to really pick a price you're happy with. And then, of course, if we blow past that price, it's easy to be like, well, now I'm not happy with that. And you can roll, and that's okay. I have a AROI formula for rolling the covered calls. I think wrong with rolling if you can do it for credit. But sometimes you're going to get to a point where the rolling for credit's not going to happen. It's just like I got to accept the strike that I picked. How many shares of ONDS do you have on this? Understandable. Yeah, I would say though, like future reference with covered calls. Let's say you have 400 shares. Maybe only sell one or two contracts. That way, that if they do get called away, you still have 200 shares to be long on. Because if you do all four, they blow past, then you're upset. Like I have Nvidia. Like I told you, my cost base is $3.72. I was very eager when I first started selling options. I sold cover calls on all of my Nvidia. It was a mistake. I locked in profits at about 30 something dollars. Sure, it's a great gain. I could have had Nvidia at 170 today, right? So it's it's definitely you have to really be okay with selling those shares. That's the biggest thing with cover calls. And like I said, I wouldn't sell them all if I have, especially if you're long term bullish. It's a great income generation tool. I'm not hating on covered calls at all. I do them. Oops. How do you choose your triggers for selling options? How do I choose which triggers for selling options? So for me personally, I like liquidity. I like reputable companies. I like high options volume. So like over here, I have a watch list that's from Tasty Trade. That's just the highest options volume. I will pick ones with highest options volume. I will listen to people in the kingdom if they're talking about a stock a lot. Well, maybe I'll open it up. I'll look at after hour too. Kind of careful with after hour. I'm not going to go for everything everyone's talking about. Um, in Robinhood, I set up a, a screener that just sorts by highest options volume. That's something I do. I really look for stuff with high liquidity, stuff I know that if I open a trade in it, I'm more than likely to get out. I don't want low liquidity. You do not want to be stuck in a trade. I've had that happen too. Did that answer the question, or do you want a little more for the how do I choose stickers? So mainly just wondering how you pick them if it's something you don't care about being called away. So yeah, I have stuff that I bought a long time ago that maybe has an okay return, but it's not huge. Like an example, I have PayPal. I think my cost base on PayPal is like $45. It's one where, and I've owned it for a long time. Like, okay, so I'm not even close to selling my investment. Is PayPal going to stay around? Yes, but they don't seem to be one of those big runners. So like I'm okay with picking a lower delta call, hopefully get a decent amount of premium in return. If it gets called away, it gets called away. Likelihood of it is low, but that's why we pick good delta. So like if we're selling a covered call, I typically go for at the highest a delta of a 30-ish, like 32 maybe being the highest, and then I will go for lower. And then what I am looking for is to get about 2% of my cost basis in premium. So let's say your cost basis is 45. dollars, I'm looking to get about 90 cents. Open. I go for the 30 to 45 day range. That's 30 to 60 day range, DTE to range. Gives me time to be right, gives the time to roll with that. It's hard right now in a bull market too, just with the calls. What range am I normally using for DTE or for deltas? Which one? Yeah, for DTE, I look to open in the 30 to 60 day range. And I always open monthly expirations, being the third Friday of the month. And that, not always, mostly. And that's just due to liquidity. So, like if I was to open a trade on Rocket Lab today, which I did, I would go for the September expiration over the August, just because it's got a little more time in it. Yeah, it's 63 days, but this is under 30. I'd rather have more time in my trade. You can go for weeklies. There's nothing wrong with it. It's just, if you compare liquidity, you look at, let's just look at the 50 put, let's just say, volumes at 35, open interest at 21. If we go to September 19th and the 50 put, volumes at 135, open interest at 331. So there's more people trading the monthlies than the weeklies. And that's why I picked is liquidity. And the DTEs has to do with, I manage my trades at 21 DTE. So depending on when you enter the trade, roughly between 30 and 60 DTE, 21 is roughly halfway. Also standardize the trade the day that I am managing my trades, since I only do monthlies. Yes, of course, everything you've bought has been with the intention of building my portfolio. Hey, when I started, for investing, I definitely did that. I'd say, like I said, when I started trading, I fell into the pitfall of cover calls on too many things at once. I shouldn't have done it. I'd say, like, for me, there was a while where I was just trying to wheel, but I locked in stuff. I had Palantir at a $22 cost base. I sold it at $25 because I jumped into a covered call. Could have had a very nice gain on Palantir today, but I don't. So, there's nothing wrong with buying stuff with the intention of building your portfolio. I think it's very smart not to jump into cover calls because, like I said, great income generation, good tool, but especially when we're in a bull market and just in stock market in general, things are going to go up over time, especially with a reputable stock. So it's important to maybe not jump into those cover calls and not think like, oh, I could get money today. Just maybe sit on it. I think that it's very important to do what you just said, though, of that your intention of buying is to build your portfolio. That's great. And there's nothing wrong with just sitting on the stock. I like most of my, where I'm at today is because I bought stuff and I sat on it, not because I traded. I mean, trading makes me money, but definitely if you have a long-term bias on the stock market, which for the most part, most tickers are long-term going to make money, like that's a great place for you to start to buy and then build wealth. And then, in a year or two, if it's like, hey, this isn't moving like I want, then you can look at opening covered calls. Like I said with PayPal, I bought that like, I don't know, 10 years ago. Well, it's not making as much money as I'd like, so maybe it's time to just sell a covered call and get some money out of it and I'll move on if it gets called away. A lot of people like the wheel. Nothing wrong with the wheel. Not my favorite. think if you have level 3 options, there's a way to kind of do the wheel like more juiced maybe. But I think because of the covered call side, I don't love the wheel. It's just me though. All right, Bad Fam. Well, thank you for stopping by. Probably will end it after you leave. So thank you very much. Go enjoy your meal. I assume dinner. You're welcome. No problem. And I'm happy to help you. And yes, the kingdom is great. I'm very happy with the kingdom. Here is my plug for the kingdom, of course. Place. You too, man. Thank you. Have a good weekend. Well, thank you for watching this, everyone. I plan to do these weekly. If you are not part of the kingdom and you're interested in joining, I got a link to my WAP down in the description of this video. I'm offering a 3-day trial. For the month of July, it will cost you $10. Prices will raise in August to $30 a month or $300 a year. Of course, if you lock in the August price, that is your price for life. Eventually, it will go up to $50 or $500, $50 a month or $500 a year. But and that's September 1st. But once again, if you subscribe before September 1st, you get the $30 or $300 a month. But hey, come join the kingdom. You get a 3-day free trial through my WAP, and you get a 1 month for $10. Anyways, hope you all enjoyed this video. Thanks.